Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that overall improves our financial success. Hello everyone and welcome to another episode of Money Mindset, and today I just wanted to speak briefly in relation to, I've got a lot of clients that always say, look, I've been with a particular bank for so long and I'm a loyal client of theirs, I've been with them for so many years and I don't understand why they won't do this for me or they can't do that for me. Now, you've got to understand banks have when they assess when they're doing a loan or a potential, could be just a minor loan or could be, you want a credit card or things, and they knock you on the head and say, look, you can't get it, and no, we can't do this, and yes, we can't do that. That is because they're assessing you on your financial situation right now. It doesn't matter how many times in the past that you've been so loyal to them. It means that they're basing their clients on the financial situation today at present, the past as well, what are your past records, but also moving forward in the future, what's going to happen and what are the potential risks if they were to, let's say, provide you with a loan or a new loan or an increase of loan or whatever the situation may be. So every time someone will make an inquiry with the bank and then they sort of feel as though they've somehow been they've been a loyal client and the banks turn around and decline them, they get pretty angry, right? Obviously. Now, can we change banks and should we change banks? And this is a massive decision. Like I said, for some people it's not a massive decision, by the way. So I know a lot of people, including myself, that can often change banks simply because of cheaper interest rates, more appropriate loan products, that sort of thing. You don't have to always be loyal to the bank, but you've got to be loyal to yourself and the bank's in accordance, right? And I'm not just saying just change your bank because, there are opportunities, although some people do. But what I am saying is don't always think that, your loyalty to one bank or one or two banks in a lifetime, it sort of doesn't really help you financially. Or I have never really seen it, because every time I'll do a refinance for a client, I always look for the best, most appropriate product, not the most appropriate brand or product within that particular bank that they prefer. Now, some people do have preferred banks and they do want to stick to the bank, and that's fine. But it's always nice to know that if you want to stick to one particular bank, what's the cost of sticking with that bank? And what I mean by that, if you're loyal to your bank and, for instance, not the cheapest or the most appropriate lending solution for you, and there are other banks out there that are much cheaper or able to save you a lot more money, why wouldn't you not consider that, simply because you're not sort of earning any more brownie points from your bank by sticking with them? Even if you explain to them, you want to make sure that your bank is able to sort of help you or assist you manage your money better and save you money on that, right? So that's why brokers are around, because they often seek and find people the most appropriate and cheaper products out there to help save them a lot of money. So changing banks after many years, especially in Australia I'm talking, can be a significant move, right? Like I always say. And but it has its potential sort of pitfalls too, right? So there are a lot of benefits, but it also has its pitfalls. So what I always say is, before you go change, and do your research, get your broker or do your own research to find the hidden fees and charges, right? So account keeping fees are often a major one, especially in business. While less common for basic transaction accounts, some banks still charge monthly fees. Like, why? I don't know, but anyway, they do. And at business loans, this goes for everything. So like I said, this is basic general overall, but compare before you jump banks. Transaction fees, another one apart from account keeping fees. So transaction fees, check fees on ATM withdrawals. Most of the time now they're all, updated, so you don't have to sort of pay that. You want to make sure for BPay, that sort of stuff, right? Specific payment types, especially if you're doing a lot of them during, your lifetime. So joining or exit fees, that sort of stuff. Compare the rates, the interest rates, like your comparison rate. For loans, always look at the comparison rate, which includes most fees and charges as opposed to just the interest rate. Make sure your broker or your accountant and your financial advisor can help with that, because that will give you a much truer picture of what the loan costs you. So if you're going to jump ship over, with banks, make sure that they are sort of, you look at the comparison rate before anything, not just the interest rate. Pretty much to what I was saying about repayment costs and stuff like that in the other episodes, where I go on and harp on about it's the dollars that are coming out of your pocket, not the percentage signs. So have a look and make sure that the comparison rate with another bank is equally or better than the one you're on. Which sort of leads me to interest rates or savings and loans. So savings accounts, for savings account, just don't look at the headline interest rate. Many high interest savings accounts have conditions like minimum monthly deposit, number of transactions. You want to look at that too, right? So ensure you can easily meet these to earn a bonus interest if you can. It was recently that the ACCC found significant percentage of bonus interest accounts not actually receiving the bonus, right? So you don't want to be caught at that. Now, loan interest rates, while the lower interest rate on your loan is attractive, always consider the comparison rate, like I was saying before. That's a must. Now, you also want to have a look at account access and functionality. Are there physical branches, ATMs, what are the niches there? Online banking, mobile apps, all that sort of stuff. Especially these days, I keep harping on to my clients, security. Security is a massive one. So many online mobile apps out there with different banks that are awesome and they do great, but you definitely want a bank that offers you a massive amount of security over your money. No use saving it for someone to take it the next day, right? So have a look at that. Ensure that the new bank or the bank that you're considering, like digital platforms, all that, they're friendly, secure, all that sort of stuff. Really do your research and speak to your broker once again. Make sure that the customer service is good too, right? I'm not just saying if you don't need a branch, make sure that you're able to call or be in touch with a lot of banks. A lot of banks provide online chat, as in chatbots now, on their online, and some people do prefer that. I find that clients, rather than calling a bank and sitting on the phone for an hour, make sure that some banks pick up the phone or the chatbot. They've got that functionality for just trivial sort of questions and stuff like that. Now, also what I wanted to do was the switching process from going bank to bank. If it's for a home loan or something, mortgage broker carries a lot of the burden for that, so make sure that you get them to work harder for you. Direct debits and credits, it's often the biggest hurdle, I think. Make a sort of comprehensive look at a comprehensive list of all your direct debits, utilities, subscription, loan repayments, insurance, direct credits, salaries, Centrelink payments, pays, all that sort of stuff. You'll need to update all this, don't forget, if it's a savings. But that being said, if it's just a home loan you're changing, don't forget that you can also keep a separate savings. So if you've got, let's say, a lot of people have their mortgage account and then they've got a savings account. So you may be with Bank A for your mortgage and Bank B with your savings account. That's fine, and you can jump from Bank A for your mortgage to Bank C for another mortgage, so you refinance, get a cheaper rate, but keep that savings going in the middle, so which means you wouldn't have to change all your direct debits and credits, right? So you got to. Otherwise, if you do it the other way around, or you're changing everything completely, you want to make employment notifications, make sure they know where they're sort of putting your wage, of course. And that takes time. So these are the sort of what you've really got to consider. Time and effort. Switching can be time consuming, right? We all know that. Now, keeping the old accounts open, it's often wise. I would always, if it's, look, a lot of people want to close their accounts. I particularly am one of those people that don't like leaving open accounts, even if it's got $1 or $100. If you don't need it, you don't use it, like old clothes, just throw it out, just close it. It's often wise to keep your old account open like for a while you're switching, because you may have forgotten when you're trying to sort of fix up all your B payments and your direct debits and stuff, you may have missed one or two. So I would always keep the old one. If you are completely switching over a savings account, for instance, make sure you keep that open. With mortgage, this doesn't apply for mortgages, right, if you're paying the mortgage off and so on and so forth. But if you've got a savings account where you've got direct debits and stuff coming out, keep it open. Start the new one, but keep the old one open. And then after 12 months or so, or whenever you feel comfortable, could even be a month or so, maybe close that if you really think that you've checked all that and you've got no other direct debits or money that's coming that could potentially be coming in. Could be shared dividends, stuff like that catches a lot of people out. If the dividend's paid 6 monthly, 12 month, that sort of thing, make sure that you've really crossed and ticked all that off. Now, your existing relationship and banking history, if you've been with the same bank for many years, you might have developed a relationship that offers benefits like better loans, fee waivers. So a new bank won't look at that, so you'll be sort of culling that relationship. So really, that's why I say these episodes, they're just a generic thing, but you definitely want to speak. If you've got a great relationship with your bank, continue and speak to them, right? Don't always just think that by changing for a cheaper interest rate. Have open discussions with them. Negotiating with your current bank before you switch is probably I would always say, and this is what I do for all my clients, I'd say, look, why you want to leave? Before we go moving on to better horizons or whatever, why do you want to leave? Is it just the cheapness of the rate? Is it the product? Find out about why. And if you can negotiate, then do it. So, which sort of comes onto credit worthiness. So while switching everyday accounts doesn't really impact your credit score significantly, opening up new ones with other banks, that can sort of affect your credit worthiness sort of thing by it's not to say that it's a bad thing to do, but it's sort of make sure you do your homework before switching with these sorts of things, right? So security and trust, massive thing, as just everyone always knows that I harp on about. Data privacy and security. Ensure the new bank has a robust sort of security measures with a strong reputation for protecting, your data and stuff like that. Massive importance there. Regulation. All Australian banks are regulated by APRA. So, APRA, you can actually get provided with a level of security that you would expect in this day and age. But be mindful of the specific practices of the banks and how they sort of regulate with security and stuff like that, right? You want to be onto that. Now, in summary, I suppose what I sort of say is before you go jumping banks or you've been loyal to them and why you should consider jumping from bank to bank or anything like that, depending on what it's for. Do your research, compare fees, compare your interest rates, compare the features of the product, compare the customer service, which is massive. You don't want to be frustrated with your bank by not getting any responses. Make sure your broker identifies that. Comparison websites, look, yes, they can be helpful. I mean, anything on Google sort of, but then, it can be wrong information. I always say make sure that you do speak to your accountant, your broker, that's very specific and they understand what you are after, not just a generic, let's read up on the website type of thing, but have a look at the bank products and do a comparison that way. But always go directly to the bank's website to get the most accurate information. A lot of these comparison websites, although they can be sort of generic and helpful in a way, you want to go direct to the bank website. And like I said, speak to people that actually work in the bank or work with the bank, see your brokers, that sort of stuff, for more accurate information. And product disclosure statements, very important also. And list everything. Compile a comprehensive list of all your accounts, direct debits and credits, right? If you're going to jump, you want to make sure that you've got all them tied up with the new savings account, like I was saying before. If you think that, look, this is going to be a lot of work, speak to your bank before you switch. Speak to your bank. Say, look, I'm thinking about jumping ship for whatever reason. See if they can match or beat the offer that you found. And last of all, sort of plan that transition. So if you decided, yep, I am going to make the transition, or, depending on what it is, allow ample amount of time to switch everything over. Make sure that you give yourself a bit of breathing space. No use putting yourself under this pressure just because you're jumping bank. Get everything done and do your homework and make sure that you've covered everything and ticked everything off. Always keep a sort of journal when it comes to that, because that way you can follow it up. If you do miss anything, like I was saying, it could be shared dividend payments that come come once every year or so on and so forth, right? It's like updating your address and all that, where you reside and stuff like that. So hope this helps. You know, while it can feel daunting jumping banks, like I've been there for so long that I don't, is it the right thing to do? It can sort of, switching banks can lead to significant savings too, right? So speak to your broker, you know, look at do your comparisons and work out the dollars and cents. And if it means that you got better features and savings after you've done all your homework, then you know, it would be quite wise to consider making a move, because you're going to be making those savings in your pocket, not the bank. So hope that helped, guys, and see you on the next episode.